Welcome to TradeTheMBI.com. This is John. This report is for the 16th of March. Well, we started off a little bit lower than the optimism of just the fact that we've moved so far to the downside. Literally, we saw it happen here with the magenta MBI moving above both yellow and the white line. And we've also had the dip of orange coming back, so it was just a question of whether that was going to have any sustaining power. And then it just caught strength because producer prices came in at, 10% increase, highest ever recorded. So that inflationary bug has a dual role. At this particular stage, it's most likely inflationary for the market. At a certain point when it actually shows that it's affecting economic growth and the revisions downside come, then it starts to have a negative impact. But right now with this setup for options expiring on Friday, and you've got a lot of countervailing positions going back and forth, and in that 42 to 4,300 range, popular ranges. So we could still see a lot more activity back and forth. But again, pretty easy from this standpoint in the view of that 4260 is the 23%. Above that, moves towards the bullish side. Below it, gets back to that negative side. There's really any flex lower here of the MBI magenta below this 25 level turns into bearish pretty darn quick. So it's just something to bear in mind. From an NQ standpoint, again, they're coming off the lows, resetting right there. So that's all the buy pivot categories that you kind of look for. Will it be sustainable? Well, we're going to know in a couple of days. The key will be on that one. We'll be watching the DSC green and see if it's able to spike back up towards that magenta as it did here for the euro. Just briefly, but at that point, you'd already exceeded your maximum from steel and it's been fading. So short-term buyers fading in that after the quick up run. And there's just still no good news coming out of the euro, and even complications when it comes to oil and that, because you have Saudi Arabia now agreeing that potentially they're going to deal in yuan. So that sort of breaks up the idea of a petrodollar, which they'd always been priced, the power of having won all those wars. From a gold standpoint, of course, we're filled back now, the positive extremes. This was secondary one right there, and the last one had already been previously filled. So now that those are filled, we can get a better gauge as to whether or not we're going to get any turnaround within the setup. It's not horrible from this standpoint. You're still in a relatively bullish with cyan under red, and it's just a question of the pivot up of magenta for the MBI. So not having been horrible from that context. And another one that I continued to expect was TLT here, which is the 20-year Treasury, continuing to decline and indicating that rates are rising independent of anything the Fed has done yet. Obviously, the expectation is the Fed will do a quarter point. The guidance going forward will be the interesting one because the market is starting to begin to price in with an increase the idea that perhaps the Fed will go softer rather than harder. Out of fear of impending slowdown. So that's that counter thinking that weighs into the market because their expectation is that more free money will be flowing in. From an oil standpoint, also had all these positive extremes. They go all the way back to here. So a little more range to go back into the 90 range for oil would fill all the positive extremes. Clean from where that started. Does that mean it's done for oil? Absolutely not. Yes, they're opening up Venezuela and trying to get every other avenue, but the other impacts are going to be felt from that. The biggest impact being, though, demand decrease just because of price. So we'll be interested to see how that starts to affect things. Bitcoin had based, and we talked about this, that it was starting its turnaround move, and sure enough, even though white punctuating this, magenta staying above it the whole way through and closing above the 50% line, boom, moved it all the way to the 100. So that was pretty decent, right within the expectations of that. And again, more very clean signaling from ETH, Ethereum versus US dollar, and just think it's a safer, easier way, a lot less expensive trading an ETF or a future in some of these if you have the proper signals rather than actually having to have the coin, especially depends on your tax situation, because I think that's something you want to review because a lot of people don't take some of that stuff into account, and whether you want even the scrutiny or not. From a 50K standpoint, that buy early from the GAM signal right there, the yellow candle, is pretty clean from that aspect, and literally continue to progress. We started with a turnaround right about here, but we're still having magenta riding above the 33 along with yellow, and yellow stayed pretty much there. We had a brief period where it almost dipped down for just a fraction, but then we started getting gold rising on 50K and falling 100%, drew it right up to the highs. So that was clean from an intraday standpoint. It was sort of boring, but not too bad. We had a couple of decent sell configurations that turned around to the buy in the early morning, and every little sell that came from there just had a quick turnaround point. Really, you had that orange right here on the DOC that tips down, and you have the steel cross above it. That's always, for me, one that I watch for a turnaround, and particularly when the orange then dips below the 7.5, one to watch. So that's the earliest stage that you're going to see it. You already had at this particular point magenta over, and over yellow, as well as over white, and then also the blue over the gray line D red. So those combinations get you just a little bit early for that nice rise up, and then did a couple little back and forth before making another secondary run. And then that one just pretty much went back and forth as the range narrowed. Yes, we got moves that took us back with the white MBI to the 0%, but there wasn't a whole lot of movement of that overall. I mean, it was still pretty decent, going from 25s to 08, so it's 15 plus points. So it's not by any means a shabby thing. But when the turnaround moves came, just lit up, and just a matter of following it and not really having to do a whole lot of anything. So easy day, pretty clean action, nothing surprising. We would still have to expect that you're going to get this back and forth where you have those strong up days where they're trying to force cover short, longer short positions that have stops that are reasonable to capture, and you're trying to flip gamma and stuff like that from dealer standpoint. So a little bit of a wild week, which no problem. Signal's been pretty clear with it, so don't have any issues. Keep at it. Don't shy away from it. That's these higher volatility weeks are the ones that really can make the outside performance for when things really start to calm down, and you start praying for the bigger range days when things go back down to 30-40 point total day versus 30-40 points 6-7 times a day. It gets pretty dramatic, but it's certainly easy for us to follow. As always, though, trade well. We'll talk again later. I'll put details up on Skype chat. Have a good one.